And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, February the 28th, 2024. We continue to get some earnings reports, again, from the larger end of the tech sector. The largest one tonight was Salesforce, which closed just below 300 in regular session, and I believe traded down to as low as 280, now looking like it's going to finish up around 287-ish, up into that area. Hewlett-Packard also reported disappointing. Snowflake, which again is not a part of the S&P that I'm aware of, disappointing. In fact, it's down 50. So that's kind of like pulling a drag on the NASDAQ, but we'll get to that in a second. So Hewlett-Packard, they didn't like them, but they brought it back. They drove it down to 26.5 about. Now trading at 27.75 again. So we're getting a mixed bag. But the ones that are coming out now seem to basically be of the larger firms. It's like Salesforce, they beat, but their guidance does kind of put a little bit of a strain on the stock. Now, what does it do for what we're dealing with right here? I'm going to start with, I believe I said the S&P, didn't I? Let me go over and do the S&P. And basically, we're still within what I'm considering a diagonal, an expanding diagonal for the S&P. If it's not, then it really is just going to be a straightforward 1, 2, 3, 4, 5. But I'm continuing to count it basically because of how everything is still all threes, with the 1, 3, and 5 doing what they should, which is a zigzag. So keeping all that in line, this is a finishing move, and it's been a very long, as far as like our trading is concerned, it's been a long while as this all unfolds, due to the fact that it began, this primary B wave, counter trend rally, began in October of 2022. So here we are, knocking on the March 1st of 2024. So we're basically a year and a half into this B wave. And we continue to just work our way towards the pinnacle, towards the top, and the completion thereof. Now, yesterday, obviously, as I left it, was not all that accurate. And so I still think that we finished a triangle in there, but I'm going to now bring it all the way down. Let's take a look at this internal. And I actually am going to open it up even more so we can see inside. Here in the S&P, it appears that it is going to be an A, B, C, X, A, B, and we're working our way down in a C wave. Now that second C wave, if indeed, let me just replace these again. I just took them off and I'm going to put them back on. And if it is still a wave 4, because what remains up in the air is to whether are we just putting in a sub-minuet wave 4 as a part of this sub-minuet advance, which will put in the minuet A wave of minute wave 5. And if that's the case, well, we're again pulling into what should be support. Now, again, if this is, a double, in other words, this would, let's do it again. A, B, C, X, A, B, and look at this mess. Just this total sideways mess that we got going on right in here. This is 3. This is a B, B, 3, 3. It's such a real big mess, but it could be forming all on its own, just kind of like its own little diagonal inside this move to form that finishing second C wave down. And so I think I would still be looking for it to kind of tuck itself below 5,063, put in a slight new low, and then be done, so to speak. And again, opening it up so you can see. Now we continue to have support down at 50.52, and that's going to come in via the hourly 200, and that's a simple moving average. And then we also have additional support underneath, that's the 50% at 5,048. Now, leaving that right where it is for just a moment. And I'm now going to reflect on what else it could be. And that would be that we have completed the minuet wave A of minute wave 5 right there. So we'd have to do it 1, 2, 3, 4, 5 possible. And it's a zig, so it's a 5-wave structure. And then this is all a part of the B wave. So it would be the minuet B of minute wave 5. Still, whatever the count is, if it's the 4th wave, then we're looking for a subminuet 5th wave up, and then again a decline back down in that minuet B wave, and then additional rally back up. So the market's just kind of playing, and either way, either we're going to get 2 more rallies, a rally, a decline, and another rally, or this is going to come in as wave 5. We're going to put an A above it, and we're now in the B wave. That's the case. Still same pattern, but this C wave is going to probably just unfold a little bit bigger. As strange as it looks, as ugly as it is, this comes in, should be coming in down here. So if it's that larger B wave move, then the support is 50, 60, 50, 40, 50, 20. Right? 60, 40, 20. A little bit, a little bit above on both of those levels. B waves, normally we're going to come in 50 to 62%. So, that would fit in getting this further down. We also have that additional support coming in via the hourly 200, the simple moving average at 50.52. So we do have that support coming off. Now, the market is going to take to heart what happens to Salesforce overnight, and then again tomorrow as the U.S. reopens. You can see that the Dow itself, of which Salesforce is a part of, only closed down 23. The future, by the way, when we take a look, is finishing up down 135. So we could get a little bit of a additional shove lower on tomorrow, or even overnight. We still have all of the Globex to get through until we reopen tomorrow morning. So right now, I am not considering, even though 51.23, if I pull this out even a little bit more, is a high above that 3rd wave. So it made it above by a good portion. And if I had to, it could be even on this 4-hour. Still get that 1, 2, 3, 4, 5. So could it be that's going to end up being the top? Well, I cannot say no. I cannot say never. That's just not the way that I do it. But what I would say is then, well, what would be the level that it would need to break to disqualify or knock out of the realm of reality for right now and put a lot more weight on this primary B wave as being complete right there? That number would be right here. 49.59. Yeah, we're over 100 points away from it. But the market would actually have to kind of come down pretty hard. If it just lolls its way down, then it's still probably more corrective. And along with the rest of the market, everyone's still expecting the rally to pick up again. That's not to say that something can't come out, which would then absolutely provide the catalyst for a stronger sell-off. So where the market would have to break? Oh, well, since we'd be looking for a zigzag here, you're really below 50.20 and down below 49.95, the market's starting to get a little heavy towards not going to happen. But the actual break, in my opinion, would have to come at 49.59. A good solid break below and a continuation. Now, on the 4-hour chart, that's going to bring into the picture at 49.55 or 56, as it stands right now, the 4-hour 200 simple moving average. That gets hit, then I'm going to be looking for some acceleration as well. So again, let me just take a peek at the daily picture. Let's see what we got coming in up here. So here, we don't have our daily 200. It's quite far. Even the daily 50 is pretty far below at 49.01. Now I could put back up the exponential, the EMAs, but Thinkorswim has this different. They call them legacy EMAs, and so I'd have to go see if I can actually put those, just the regular EMAs back up. But I'm using the simple, and that's where they come in. So on the daily, we're still within, we haven't really broken back below the 8. We're kind of tossing it around with the 4. Then we have the 8 on the daily, and there's the 20. So the 20 is at 50.10. So again, let's just say on the basis of a daily chart, if it were to break below the 20, which now sits at 50.14, it's going to start to lean that this could possibly be all complete, and we're now beginning to head lower. And it will pick up speed if we, on the daily, start to produce a more negative picture. So that's kind of the S&P. I'm putting it out there. I will continue to trade what's basically in front of me, but I think if you're a position trader, you can't ignore it. Right now, I'm still looking for, and even this is not really appearing like it's just going to crumble and fall. It seems pretty corrective and choppy and just up, down, up, down, up, down, up, down. So there were many points today where the market just decided to turn and rally, primarily because there are a couple of stocks here and there, one of them being Tesla, just kind of catching, and the other one being Boeing. Boeing decided to catch a bid today after getting hit and hit and hit. Again, what propels one, to the market to make its move? I don't follow it that closely. So here, right now, I'm looking for some clarification. Is it going to be a wave 4 or is it going to be a B wave? Either one. If it's the wave 4, I'm looking for a rally back above, get above 51.23, finish the A wave, come back down in the B wave, which is another trip all the way back down into these areas, and then rally one more time. Now that kind of seems like, wow, that's quite a bit of trading. And it's like, yeah, it is. And we shall see what to see what the market can do or wants to do. All right, so let's go over to the NASDAQ. The NASDAQ continues to just do the same thing. But what I thought was 4, and then we were off to the races, boy, got hammered. Hammered into Yeah, just got hammered. So I'm basically going to come down to the 15-minute chart because here we are. And what it does appear that what it could be, again, the being off just by a little bit. So I'm just going to open this whole thing up. Here we have the 1, 2, 3. Good. So we're still going to give the benefit of the doubt that we're inside that fourth wave. Now, what did we do today? We came below it, and we're closing a little bit below it. The low is, I think, 48, 46. And so they managed to get it all the way back to 60 for the bell. That's secondary, right? Not the official close, but the extra hour. So what do we have? We have an A, we have a B, we have a C, and now this came over, right? A D. Now let me just put this in. A, B, C, D. I thought that would be the E, but somehow I've got to work this out. So this is wave A. Then we start the triangle. Triangle is in wave B. So that's the A wave down. And here we have A, B, C, D, E, and this is ugly as could be. D, excuse me, E. And that marks wave B, whether it's wave B of 4 or whether it's wave B of B. That is what is out there to be determined. Now, as we start to break below what should hold just a fourth wave, it leans it towards this being 1, 2, 3, 4, 5. This changes to a 5. The 3 comes over to here. 4 goes there. 5 goes here. And A goes above it. And we have the A, the B, and we're working on the C wave down for the B wave. Now, again, if indeed we're looking at it as still being a part of the A wave, and this is wave 4, very well extended out time-wise, against what the 2, it's like it gets just a little bit shaky. So I'm going to leave it because the NASDAQ does the strangest things on the planet and look for further confirmation. And so if I take out this and put up the other fib levels for the B wave. Oops, come on. We're right there, right there. Come on. Thank you. So what we have is it's coming right down on 382 for the B wave, but B wave, we'd be looking for 50 to 62%. So we still have that extra room. It comes down and we still rally. Now, could the same thing be happening here? Yes. Right? Let me open this back up. Let's go back out to that hourly chart. Minute 4, we're looking for minute 5. It needed to put a new high above 18,121. It did. Went to 18,145, basically. Okay, so, and I can go 1, 2, 3, 4, 5, done. It can be done. What do I need to see to give me confirmation? Unfortunately, same deal. It needs to come down and break the low of wave 4. Therefore, then this is not even, no matter how I look at it, it's not correcting this initial wave because it can't exceed the beginning of it. So if it does, that's what the market would have to do. And we're looking at it's going to have to drop an additional 500 points before we would be able to say no more rally. Not for a while anyway. So in both the S&P and in the NASDAQ, those numbers are pretty far down below. Now, we're going to get hints. If it starts to break and we get some speed in this, right? This rally does not give us any points of support. So right now, we came down and we did break slightly below the hourly 200 simple moving average, along with that fib level. And the fib level is for the whole rally, 382. broke slightly below, took it back. Now, if we come in tomorrow and they decide we're not happy with any of this, and they just really start to hit this overnight, and then again tomorrow morning, and we start driving it lower, these are our next levels. If it really starts to break 17,667, I'm talking by a great deal, notice we have nothing. On the hourly chart, moving averages are already all taken care of. We got the hourly 50 turning. We got the rest of them turned, I should say. And so this is the last hold to rally on a moving average basis on the hourly chart. Quickly flipping out to that daily, we'll just take a look. We still have them same as the S&P. They're still pretty far away, but a little bit of a negative bar building here, and the close being a little bit on the negative side. So the daily starting to waver. Back down here to the hourly chart. It could start to go, and we don't really have. There's a little bit of support at 77.20, a little bit of support. We have the fib support, but because of the rally, there truly isn't anything in here. The moving averages are all disappearing. The bottom of the trend line, that we got, right? If we got the top one running out there, right? So crossing over at 18,161. If we come down and we break that bottom trend line, well, that's another little bit of a hint. And so we got that. It's going to intersect currently just below 17,500. So we maybe wouldn't have to wait. We will start to get the breaks, which will start to toss this thing to completion. The market definitely is kind of starting to make you feel as if, yeah, that could be it. So, but again, it becomes very difficult to put that call in without the evidence, so to speak, technical evidence of it being in place. This does not seem or to look impulsive on an hourly chart, and that's what I'm looking for. In fact, the whole thing just kind of, could be like a double. And now we've got this. We have wave A, we've got a B, ugly triangle, bringing it back up to here, right? E. And then we got this 1, 2, 3, 4, and check this out. Another small diagonal for wave 5, an ending diagonal for a fifth wave that may have done it here, but I don't know. This is just very kind of nasty. 3, 4, and a 5. And then we bottom somewhere in here. And then turn and rally. And then what is it? Is it a 4? Or is it the B? All of that is still out there. Cannot say. Does not make trading any easier, to be honest with you. Day trading, yeah, you're going to be able to do okay because we're just following price. And on our very short term, we had some decent moves today, which we were able to catch. The decline, the turnaround rally, the decline. This one more difficult, but this decline, oh yeah. It was like very catchable, but it was after the market. I grant you that. So between, we got a way to sell off, and then they raced it all the way back, and then drop. So again, not the easiest in the planet, but even on the 15 during the day, it worked. And this rally was kick butt rally. Then it was like, get out of the pool. So having those things happen, midday, this was the opening. And then right about there, right about 10:30, just get out of the pool, run it. And they did. and then sink it, and then run it, and then sink it. So you can, price-wise, follow the bouncing price. It provided opportunity. And then again, we're dealing with following fibs on a smaller time frame, moving averages, points of control, value area high and low, and just actual trading against the candlestick. Candlestick patterns that show up and that get triggered and produce good trades. Does it help so much on the Elliott? By the end of the day, yes. You can go in and take a look and see, boy, that's pretty ugly and nasty, but it'll fit. But during the day, that's what I get reduced to. So it's not that easy, and particularly if you're a position trader, it's even more difficult. Well, what do I do? But a lot of times it's like I'm seeing it coming out in the options. And like I said today, for the NASDAQ, it was Tesla. There were moments in time where I'm looking at this market, I'm like, wait a minute. I go over and I check my I have other sources that tell me what's going on all of the components inside the NASDAQ. I'm like, Tesla, you're the only one that's really got any pressure to the upside here. And yet it kind of felt like it was controlling the entire NASDAQ. And it was really up like 3.5, maybe $4. Then it would slide back down, etc. So it was kind of real. It was very strange. Anyway, I am going to wrap it up right here. And I know we've got some points. We got to see how this market's going to react. We'll find out, I think, pretty quickly whether this is the 4. I mean, whether this is the 5 and this is all a part of the B, which is where here in the NASDAQ, that's where I'm kind of leaning towards. Let's see if it gets down to that 50 to 62% and then rallies again, because then we have the next one out that we're going to have to look for. And I understand that if you are a position trader, or even if you're a swing trader, you're gonna be able to catch some of these swings, because let me tell you, 17,960 down to 17,850, still a good trade for a swing trader. Position traders, yeah, it's a whole different story. Anyway, tomorrow, what do we got coming out in terms of economic data? We have initial jobless claims. Here comes the big one, folks. We have PCE index. And so we have initial jobless claims at 8:30 a.m. Eastern. We have the PCE at 8:30 a.m. Eastern. So before we even open, I would imagine there's going to be some rocking and a rolling. At 9:45 a.m., we have the Chicago Business Barometer, which is a PMI, Purchasing Managers. At 10 a.m., we have pending home sales. From 10:15 a.m. all the way to 3:30 p.m., we have governors and presidents from the Fed out talking. So a lot that could be affecting our markets throughout the trading day. And friends, that's where I am going to finish it up. And the next update will be on Thursday, February the 29th, the final day of February. Let's see how they want to treat it.